So today we're going to talk about probably one of the biggest threats I have seen to the stock market, and this actually comes from Trump. I think Trump is right now maybe not realizing he is actually talking about, for me, one of the biggest threats to the stock market. And I actually thought when I saw this originally, this news story, I thought, nah, this is just someone, clickbaiting, creating FUD, wanting to get bums on seats and listen to this fear story that's out here. And then after a while, I realized, actually, this is true. This could be actually considered as something that's going to happen, this big change that's going to happen. And it would be disastrous. I generally think this is a big threat to the stock market. Sometimes, people put stories out and like, oh, this will change the stock market forever. The stock market will suffer big time for this. And quite often it turns out to be nothing. But this is the first thing I've seen for a while where I actually went, geez, like this worries me. This is the first time I've seen something for a while. I went, they better not do that, because that is a game changer for the stock market, and not a game changer in a good way either, like game changer in a real bad way. So we're going to talk about that today. Before we do, I hope you're all having a good time out there in the stock market. I hope it's really been kind to you at the moment. For us, yeah, really kind. Up 38% now on the eToro portfolio. Really good year. So for you 27 copiers on eToro, I hope you're having a cracking year after copying. And if you do want to follow me on eToro, I have a link in the description to sign up, guys. So let's get on the news today of what is the big issue that Trump is causing in the stock market. And then I've also got some hims and hers news for you a little bit later on in the video as well. So yesterday on X, saw this, thought, nah, this is not true. And then I realized this is actually true. Trump is going to push to scrap quarterly company reports, and quoted as, will be a win for investors. So President Donald Trump has indicated he could move companies reporting to a semi-annual basis, which would allow firms to save money and focus on the businesses more. Could not disagree more. Could not disagree. This would be an awful decision for the stock market if this was to happen. And I think this is the case with Trump at the moment, is that he's someone that just gets too involved in things. It seems like he wants to get involved in everything that's going on rather than just kind of dealing with the major issues and sitting back a little bit. It seems like he wants to always be in the headlines, which I think is a fair statement for Trump. He's a guy that likes the media attention, I think, sometimes. And this headline here, like, quite often I see things pointed out in the media and people go, oh, well, this is going to be awful for the stock market. And I go, well, I'm not sure about that. But this generally for me was the first time I've seen something and went, wow, that would be terrible. Like, for companies to scrap quarterly earnings reports and go to a semi-annual basis would be terrible. Like, to get updates, twice a year, 365 days, and you get 2 updates a year. That's, a year's a long time. And to only get 2 updates in that time period would be insane, especially with how fast things move at the moment in the world. To get 2 reports is awful. Imagine the lack of information that you would get during that time frame. One of the beautiful things about the stock market is that when you get these 4 updates a year, which I don't think even 4 updates is a lot really. I'd be after increasing it rather than decreasing it, but 4 updates a year. And the great thing is that when you see an update in like January and you can see things moving up in the right direction, and then you get the next update in whenever it is, April, and you see things starting to move a little bit more in the right direction, and then you get to June update, and then you get a little bit. That's the best thing as an investor, where you just start seeing those quarterly updates, and you just see things ticking up in the business, and you're like, wow, look at that, they've got something going on there. They've done 2 updates in a row, 3 updates in a row, and the financials are just starting to turn the corner. The market hasn't realised yet. I love that. That's really my investing tea to a core, is where I look at these quarterly updates and go, the market doesn't realise they're doing a U-turn at the moment. And when they realise, the stock's going to skyrocket. That's the great thing when you read earnings reports and you get to see things that are just turning the corner around slightly. Imagine if you got updates every 6 months. You would have this thing where you'd be getting companies that come out and they were like, massively gone up in the right direction, or you would get companies that 6 months ago were absolutely flying, and then they've had a horrible 6 months and the company's massively gone in the wrong direction. And imagine when those news stories come out, imagine what the stocks are going to move like. You see some of the movements sometimes in some of these stocks when they do quarterly basis. You see stocks going up 10-20%. Imagine in 6 months time period, the amount of things that could go right for a business or wrong for a business. you'd see stocks absolutely flying up and flying down. The volatility would be absolutely insane in the stock market. And from an investment point of view, it would be so hard because things would be changing so fast with a business. You could see businesses surging up and dropping down massively during that time frame. It'd be really hard to see it as the slow curve starting to happen. It would just be from boom to bust and bust to boom very quickly. And if anything as well, for me and you as retail investors, would also put us as a massive disadvantage is that, all these like the big money out here, they've got all the data, like they've got all the credit card data, so they can see which companies really from a weekly basis are probably doing quite well and which ones are starting to tick up. So they've already got a little bit of advantage to, on the data side than what we have as retail investors. Retail investors, we're kind of waiting for the quarterly updates before we kind of see things moving up or down in the right direction. We don't have the big advantage of these big credit card datas. Some of these big monies that are out here in the market, they have the ability to go and talk personally to the CEO. They can call them up and say, how's things going? I've just got a question about so and so. We can't do that. So that for the big money, that once again puts them at an even bigger advantage to us retail investors. Us retail investors, imagine us trying to do this in a semi-annual basis. It'd be a nightmare. So yeah, it would be so hard to see things that are just starting to turn the corner slightly, and it'd be so volatile, and we'd be at such a big disadvantage to some of the big money out here. It would be awful. Like, it would be a point where I think you would have to probably reassess if you could still do this. Like, would it make US stocks a little less attractive? Would it make people, once again, maybe flow out of US stocks and go, I don't like the semi-annual basis. I might go into, the other markets. They're still doing quarterly basis, like the UK markets or European markets. I don't know. But it would be awful. It would be terrible. And, imagine, things change so fast right now. Imagine if we were on a semi-annual basis with some of the things that happened in the last year. Imagine this AI situation. You'd be waiting for these earnings to come out and they're getting disrupted by AI. And then they come out with the report and go, actually, no, they're holding up okay. Or you might be going, oh, no, they're going to be absolutely fine. They won't get disrupted by AI. And then you realise they've got absolutely stung. And the financials are awful. Imagine during this tariff situation and the companies reporting on a semi-annual basis, you'd be like, it was 6 months of people going, oh, our company's getting affected. We'll have to wait another 6 months to find out when they report the financials. Imagine 6 months of that hanging over businesses. Imagine the COVID times. You're there hanging around going, oh, businesses are doing awful. And then you actually come in to you have to wait 6 months to go, actually, some of these businesses are actually doing really well at the moment. You would have to wait so long. The 2022 situation, some of these companies are getting absolutely whacked by inflation. Actually, we had to wait 6 months before we could actually realise that. It would be awful for this situation as an individual investor. So generally, I really hope this isn't followed through with, because I think it would be such a bigger advantage to the big money, such a disadvantage to the little investors out here. And it would put you at a massive disadvantage where you could spot the trend starting to turn in some of these businesses. It'd just be boom on bust on the financials. It'd be absolutely awful. So I really hope this isn't, something that is followed through by companies that can focus on the business more. What a load of rubbish. They've got people in the roles for reporting this. They already know what they've done quarterly. They'll be managing it quarterly. All they have to do is add in a few words and tell the market some new things that they've been doing in these quarterly reports. They'll still be doing it. They've got people in place to manage this. They'll still know the data. It's not at all saving money. That's just a load of rubbish, is that? And cost cutting. Yeah, give me a break. So yeah, I think this is awful, and I really do hope this isn't something that's followed through to investors, because it'd be an awful situation. So we'll keep an eye on that one. Just wanted to point out US retail sales. I thought, these are due out today. It was due out at lunchtime, or about 2:00, I think, in the UK side of it. And I thought, this morning I was like, the US retail sales are coming out today. I wonder what they're going to come in at. I wonder if that's going to be showing some weak data. And it got to about probably 7 p.m. tonight, and I went, I'm sure US retail sales are out today, and I've not seen any headlines at all about them. That's weird. I was like, have I got the wrong day? I thought, I've either got the wrong day, or they've come in really good. And as we know, media, Media doesn't like to report on happy things. No one wants to see good numbers. The media wants to put bad numbers out, don't they? I thought, I bet either I've got the wrong date or the date is coming really good. And the case is, yeah, it came in really good. It came in at 0.6% for July, which was above the consensus of 0.2. So, yeah, really, really good for retail sales in the US at the moment. So, good to see retail sales are still holding up at the moment, which has been a bit of a slowing down time in the US economy at the moment. Last one, Hims and Hers. So Hims and Hers have had a bit of a whack today, down about 5% at the moment. It's been having a little bit of a bounce up actually recently, Hims and Hers again. So, as it does up and down quite a bit, I took the chance a couple of days ago. Was it on Friday? Took a little bit of profit off the table off Hims and Hers again. But came out that the FDA has warned over semaglutide claims, which, yeah, I looked at the story and I thought this is like a nothing story, basically. They basically have come in and said that they've done false and misleading claims on its website, saying that it is the same ingredients as Ozempic and Wegovy. And basically the FDA have said, like, you got to remove it and tell us what you have done to remove it. Won't be really, Hims and Hers will remove that, and they'll basically won't really they'll just get a slap on the wrist, really. Nothing, nothing like too major. And yet the stock like dropped 5%, 5% today, which was like, crazy. But the thing with Hims and Hers, and the more I realise with Hims and Hers, and that's what I say about Hims and Hers at the moment, is like, I think the next few months are going to be quite bumpy for Hims and Hers. Like, the valuation's pretty decent now. For quite a long time, Hims and Hers was always like a ridiculously cheap valuation, and it's now like an okay valuation. So I think that's probably going to stagnate a little bit. I think they've also got obviously the revenue slowdown that's happening at the moment. But I think as well, what a lot of people are playing on at the moment is when you look at Hims and Hers on a short interest point of view, so the amount of people that think the stock's going to go down on the float is nearly up to 40% here. 40.9% at the moment is what Google AI is saying. That is significant. Like 40%. Like, to put that into context, that is probably what the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14th, the 15th highest shorted stock on the stock market. 15th. That's crazy. 15th highest. And the thing is, like, Hims and Hers is a company that has good growth, great profit margins, great balance sheet, major drivers for many years. It's very rare you see a company that is smashing it to be so highly shorted because why are people shorting? Quite often people short because they think the company's going to go down, and a good reason why they think they're going to go down is because they think that the company's entering financial difficulty, which just isn't the case with Hims and Hers. Like, if I showed you some of the other ones that are quite highly shorted at the moment. So I tried doing this first one, this Oris, but there was nothing coming up. So I tried the second one, which is BNC. To show you an example of that, right? Look at this company here, right? So right now, this company has 3 million in revenue and 3 million in losses of earnings. They lose the same amount of money that they make in revenue. And like Hims and Hers is, only 13 places below that stock. Right, I'm literally going to pick a stock that I've never heard of right now just to show you. And let's go for something that's like quite close to Hims and Hers. So let's go with this, like this here. Let's go with this Tango Therapeutics. I've never heard of that. So I'm not even literally like being biased here. But I'm going to show you like the comparison of like, the sort of company that Hims and Hers has been lumped in with. So their ticker symbol is TNGX. So let's put TNGX in. I hope it's not a good company. I'm going to look like a right idiot if this is a pretty good company. Okay. It's a good job. I don't have to edit this out. Like, this is a perfect example of like what Hims and Hers is getting lumped in with at the moment. So this Tango Therapeutics, TNGX, so they're currently making 24 million in revenue, and they lose 145 million a year. They lose 5 times the revenue. Wow. Wow. This is the level that Hims is getting played at on the short interest. I mean, they're a 726 million market cap, and they're losing, what, nearly, oh my days, I don't know, like a third nearly of the market cap every year. That's just, and it's just going in the wrong direction as well. Oh my days. They've got 180 million on the market cap. Sorry, 180 million of cash in hand. They're literally going to go bankrupt in the next 18 months. That's what Hims are getting played at. I mean, if we just to compare that to someone, let's compare it to Hims and Hers, for example, right? And by the way, if you like this platform that I use in the video, it's called Simple Wall Street. Link in the description, guys. You know, if you look at Hims and Hers, like, look at this. Look at that revenue chart. Just up to the right. You look at the profit growth here. Insane. Now let's have a look at the balance sheet here. Look at that. Incredible. So, yeah. I don't know. It shows you what Hims and Hers is getting played at the moment and what they're battling with. It's crazy, isn't it? Anyway, that's the video for today, guys. I hope you enjoyed it. Let's hope those changes don't happen to the company's earnings. And good retail sales from the US, and also just the battle that Hims and Hers currently have at the moment with the market and the shorts at the moment. So it's definitely not going to be an easy time for them guys at the moment anyway. So yeah, thanks for watching, guys. I'll see you tomorrow. Hopefully tomorrow is the day I actually get round to doing the video on Lululemon. I've been wanting to do that video for like the last 2 weeks and I never got around to it. So hopefully I get it done tomorrow anyway. Thanks for watching, guys. See you in a bit.